We are heading into an incredible week. Wednesday and Thursday are likely to trigger massive volatility across all high-risk markets. There are important and potentially dangerous signals appearing on the Bitcoin chart, and they need to be understood. Ripple's price action is quietly hinting at increased risk in the altcoin market. Ethereum is preparing for a powerful move, and gold is rapidly approaching our long entry zone. How are market makers misleading the crowd in this cycle? What am I holding in spot, and what is the action plan going forward? Welcome to the weekly crypto market overview. Today is October 27th. Earlier, I gave you a long setup on the AT token with an entry around 0.90 keys. Price tapped the order and bounced exactly as planned. We already hit our third target, so remember to lock in profits. These profits will later allow us to open new positions with reduced risk. The next key interest zones for Astra are 0.88 and 0.85. If the market gives us the opportunity, we may see another strong bounce from there, possibly even a trend reversal. Time will tell. Also pay attention. The hype token we entered from our long zone has already given about plus 140% clean movement, without leverage. During this recent correction, we also accumulated SUI, XRP, and AVAX. This trio has already delivered around plus 20% clean upside. We didn't waste time during the dip, and we profited very well. Bitcoin has been showing almost uninterrupted growth since the start of the new week. And that's completely normal. First, we already discussed the extremely bearish sentiment among influencers and retail. Second, based on insider data from referral-based exchanges, recent trading volumes have fallen to 2 or even 3-year lows. So we note the following: apathy, disappointment, and a deeply bearish emotional backdrop in crypto are often the perfect foundation for a strong rebound. Why? Because the market's beneficiaries need only one thing: liquidity. Our confidence, our willingness to buy, or at least to trade. Without retail liquidity, they cannot profit. So when the market is depressed, they must find a way to ignite interest. Also, last week we received an excellent inflation report. Inflation is slowing down, even as the US-China trade conflict continues. Now let's talk about the risk factors most traders overlook. First, there is a large CME futures gap below Bitcoin's current price. A gap formed between Friday's close and Monday's open. Historically, about 95% of such gaps get filled sooner or later, usually at the most inconvenient moment. Second, this rally started on so-called good news while traditional markets were closed. The U.S. Treasury Secretary said negotiations with China are progressing well. News-driven pumps like this are usually unreliable. Joining them emotionally is one of the most dangerous mistakes in trading. And remember, this week the market expects 2 events that investors currently view as extremely bullish: the Federal Reserve meeting and a potential U.S.-China trade agreement. That creates overly optimistic expectations. If reality is even slightly worse than expected, the market may reverse sharply. Now let's move to key market observations. First, gold. It is quickly approaching our long entry zone. From that level, there is a high probability of a strong bounce. This aligns with the current macro structure. When gold corrects, the crypto market often breathes and gains strength. Second, XRP. Its slow, controlled climb without clearing liquidity below suggests that a sharp liquidation move across altcoins is possible. This type of structure often leads to a fast correction before continuation. This is an important risk signal. Now to Ethereum. If the ETH-BTC chart continues pressing against resistance and eventually breaks it, Ethereum could show exceptional strength. When ETH holds or rises while Bitcoin corrects, this is historically the starting signal for alt season.